Welcome to the Spirited Agent Podcast. We're pouring wisdom and sipping success one episode at a time. The Spirited Agent was created to empower agents to navigate the ever-evolving world of insurance and grow their business. Grab your glass and let's get inspired to protect your clients from the unknown. Here's your hosts, Millennium Brokerage Group Legacy Planning Executives, Jason Combs and Matt Zelenik.
Hey everyone, and welcome back to the Spirited Agent Podcast. Today, we'd like to welcome back Bill Zelenik, founder and CEO of Millennium Brokerage Group. He's joining us for another discussion here. And Jason, you want to go ahead and get into what we're drinking this morning?
Thanks, Matt. So we've got a Wild Turkey single barrel, 101 proof. It's from the Camp Nelson F building, and so it's supposed to be some of the best of the bunch. So let's get into it and see what we think. Smells sweet.
Yeah, it does smell sweet. Very sweet. Very vanilla forward.
I would say some of the sweetest I've ever had.
Yeah. Really?
Yeah.
Different than a lot of bourbons.
Yeah, very, very true.
Yeah, it is very sweet. Kind of light. I'm getting the vanilla caramel. It doesn't really punch you in the face, but it's just nice, smooth notes.
Yeah, that's pretty good sipping whiskey.
Yeah, nice stuff.
Yeah. Lately, on a lot of our content and episodes, we've received a lot of comments that are just, insurance is a scam. Guys, let's just kind of discuss, when you hear insurance is a scam, why do you think people say that? Why do they think that?
They feel that they've been taken advantage of. They've been scammed. Feelings are always accurate, but they're not always based on facts. In some instances, no question, because just like any industry, we have people who will scam you. I think a lot of those feelings come from less than great explanation how the idea of insurance works. When you don't have an answer as to why something's happened to you, I think, naturally go to the fact that you've been scammed. So I would put that on the industry, not from a scamming standpoint, but from an educational standpoint.
I mean, all insurance gets lumped together, but in reality, there's a lot of different kinds of insurance.
Right.
So, I mean, in what we do, which is mainly life, long-term care, disability, annuities, I don't personally see much scamming going on in that scenario. But a lot of people view insurance from health insurance, their property and casualty. Those are two of the main insurances they deal with on a more frequent basis. There's more possibilities of claims being denied in those scenarios than what we generally deal with.
If you have car insurance, the chances of you having an accident are substantially higher than the chances of you dying if you have life insurance if you're a young person. You've paid for the last 6 or 7 years your automobile insurance. Now you have an accident, and now you're going through all these hoops, and they're telling you what they're going to pay for, and they're depreciating this piece and that piece, and the car's 7 years old. All things that you didn't think about, and now that's getting you less money. So I think you feel a little scammed. But again, I take it back to nobody really explaining to you to begin with how that all works.
I don't think most people take a priority to review their coverages often enough. I mean, I know personally, I haven't reviewed my coverages with my agent in a number of years. It may seem like a pretty mundane task, but it's something I think, you are paying a lot of money for these coverages. You owe it to yourself to at least sit down with your agent and understand what it is that you have and what you're paying for and how some of these coverages operate.
About 2 years ago, I got pulled over for my license plates being expired for a month. A couple days later, I write a check for the ticket, take the ticket, put it in the little mailbox down there near our little strip center, in Franklin, and I forget about it. Well, as it turns out, that check never shows up at Williamson County. The state notifies me that they are going to revoke my driver's license. However, I haven't changed my address since we moved to the new house, so they're sending it to my old address. And all of a sudden, one day, my agent calls me up on my auto insurance and tells me, your license is revoked. You no longer have coverage, right? But I have to go through going back, taking tests, doing all this stuff. And then when I get my license renewed, my insurance for my driving goes up $2,400 a year. And it's going to go up $2,400 a year for 3 years. And the reason is, and this is a problem with the industry, every automobile insurance carrier just looks down to see if you've had your license revoked. They don't care whether it's for DUI, running somebody over.
Yeah, no more questions asked.
Not paying a $46 ticket, right? And so I'm paying 20 and I can't get it changed. So I'm feeling scammed. So I get it. But it's the bureaucracy of both the government and the insurance companies, which leads us to that point.
Yeah, I've got the story here where in my subdivision, we've got 90 homes. And, a few years ago, we had some bad storms. All the homes were built about the same time, so all the roofs are like 20 years old now. But the roofers show up and they want to start putting new roofs in. Well, turns out, 88 out of 90 homes get a new roof. And it just so happens that the two people that didn't get a new roof are good friends of mine. One lives right across the street, one lives down the road. They've had 4 or 5, roofers out. They go up, the adjuster goes in, they don't get it approved. So from their perspective, they're like, a storm comes through, hits 88 out of 90 homes. How didn't it hit my home? So that they feel a little scammed. But, kind of again, it goes back to, reviewing the coverage. I took the time to actually read the policy and actually find out of a few little things in there. And I think the roofer did as well. So I think details matter. And so I think, just a couple details here and a couple details there changes the way some of those claims are viewed and how they're handled.
I think what most people don't realize about that is, and they see it's a scam because had this damage, now they get their roof fixed and all of a sudden their premiums go up $2,000 a year or whatever. In any state, the insurance companies have to file their automobile and homeowners rates and say how much the premiums are going to be for this type of house and that, and the state has to approve that. And if they think their rates are too high, they don't approve it. Part of the issue that people deal with when the rates going up is that's that one state, but that insurance company does that business globally in the United States. So if they've had, because California won't cut underbrush and wants some owl running around on the ground, allows billions of dollars of homeowners to burn down, that's going to be spread across the country in increased rates because California is not going to allow them to just charge everybody in California the full amount of what that costs now because of what they did. So a guy in Tennessee or Kentucky is paying a little higher automobile and homeowner rates because they're trying to make up for what happened to them in California. And to the defense of the insurance companies, in 2024, how much do you think property and casualty insurance companies paid out flood damage, fire damage to homeowners?
Billions.
You're right.
Yeah.
But it's how many billions you'd be surprised with. How about 41? 41 billion. None of those guys made much money that year. Unfortunately, the way insurance works is Jason has the claim, but the three of us are actually paying a premium based on that claim. Without insurance, we don't have an economy. Because if you didn't have any insurance, you'd have all kinds of banks rolled up right now in complete bankruptcy over the $41 billion in homeowners that couldn't be that mortgages that wouldn't be being paid. If you want cheaper homeowners rates, I guess we just need to give California back to Mexico. Your automobile and homeowners person who's selling you that, they're not going through that explanation. They're just telling you, here's your rate, and you either got to pay it or try to shop it. And even when you shop it, you find out, like I did on my car, it's going to be basically $2,400 wherever the hell I go. So naturally, I feel frustrated, but nobody's explaining that to the customer. So back to what I've said, I think the companies need to do a lot better job of explaining how they work. But I think that's vastly different than the area of insurance we work in.
Yeah, I would agree.
Life insurance and disability, long-term care, retirement products. I don't think there is as big a feeling of being scammed in that area is there's probably a bigger feeling about, do I really need to spend the money to do this?
I think, do I need to spend the money, or is this a waste of money that gets lumped in with insurance as a scam?
It kind of reminds me of a story that one of my mentors early on used to say a lot. And he'd always ask the question, what's the best type of life insurance policy you can own? And the answer to that question is the type that's in force when you die. There's no interpretation of whether you're dead or not.
Right.
And one of the nice things about life insurance is it pays out pretty quickly. I mean, I worked for an insurance company for 20 years. Those are in, they're out within 2 or 3 business days at the latest. Goes back to the education, understanding what type of insurance policy you own, any nuances that may be associated with that policy, and making sure you pay the premiums on time.
In those 20 years, did you ever see or hear of a death claim being denied for any reason?
I've seen one death claim denied, one death claim contested for a while. Both claims were eventually paid. The one that was initially denied was a pretty famous court case here in Tennessee. What happened is there was a young man at a country club who had taken out a $1.5 million term insurance policy. His broker, which was not an insurance guy, actually was an investment guy, filled in his app and he checked that he had never had a DUI. He told the people at the exam that he'd had a DUI. Okay. So it was disclosed to the insurance company. They give him the regular rate of it, of a preferred rate on it. 4 years later, he is drunk. His family's out of town and he hits a culvert off Granny White. He's killed. And the insurance company denied the claim. When an insurance claim like that is denied, your lawsuit falls under the Consumer Protection Act. That's one of the reasons most claims aren't denied. When you go under consumer protection, you're getting automatic treble damages if they are convicted of wrongly not paying your claim. AIG eventually settled their piece of the $1.5 million for $1.2 million. And then the family actually sued the stockbroker for consumer protection and how he did it and collected another $2.5 million. So most companies don't challenge too many death claims unless it's pretty clear that you falsified something, because they don't want to get into the quote unquote world of Consumer Protection Act. Most people don't realize they're covered by that. My guess is that most people listen to this podcast, that's a news flash.
A lot of people say life insurance is only useful if you die young.
I think what most people don't understand is life insurance correctly purchased and for the right reasons is nothing more than a form of a long-term investment. If you went to the U.S. government today and said, I want a 30-year bond, and I'm going to put $1,000 a year into 30-year bonds, the fact of the matter is you're going to average somewhere around 4.5%, 5% and get your interest plus that back in 30 years. If you say, I want to have $2 million in 30 years and I'm going to pay this into this term insurance or whatever, or permanent insurance or whatever, and you die within that time frame, you're actually going to exceed the rate of return on your money that you would have off of that guaranteed U.S. government bond. Remember, life insurance is non-taxable. So, when you do that 30-year bond, you're paying taxes on the interest every single year. When that life insurance is paid to you, no taxes. I think the problem that our industry, again, and I'll put it on our industry, has had is a lot of people selling our products really don't understand them, number one, themselves. And they do it from an emotional basis instead of a pragmatic basis.
Yeah, life insurance is there for when you die. But the question I think you also got to ask yourself is, what does it do for me while I'm alive? Life insurance as an asset class or as a type of investment that has a fixed rate of return. And no matter what happens, let's say just as a round number, you got $1 million going to your family. So does that allow you to take more risk while you are alive? Things like, can I be more aggressive in my stock portfolio because I know that $1 million is going to go to my family? Does that allow me to take more risk in the businesses that I may invest in or the businesses that I get into? So I had a friend here recently, and she's a little, maybe a couple years older than me, but she had her house paid for. She doesn't have any real debt. She had some life insurance and she was considering dropping the insurance. She came to me and she's like, what are your thoughts on that? And it was kind of pretty well paid for. So dropping it at this point really didn't make much sense. But I asked her that question, what does this do for you in the, while you're living? And she's like, she really hadn't thought of it. So one of the examples that I said, well, what happens in a situation where maybe you need some long-term care? You've already said you got your home paid for. You could take a home equity line of credit against your house in the event that you need this money. And then you've got this permanent life insurance to pay off that debt when you pass, and it's still free and clear to your estate. So, and those are the type of things that I don't think people really understand when it comes to what the life insurance policy does while you're still living.
The more sophisticated aspects you get into with life insurance, like in the business world or in the estate planning world where people are going to pay estate taxes, a lot of people buy insurance there. They don't consider it a scam. What they consider it is, so for example, the three of us are business partners, and there's some age differences here. I'm the oldest. Jason's kind of in between. You're the youngest. Well, if I drop over or I get hit by a bus, is it better for us to have paid a little bit every year to cover that actuality so that you two still own this business? Or are you going to set aside money every year to pay my wife, Dana, for my ownership in this business? Unlikely. So what that does is it allows you to transfer your business. And so in those worlds and estate planning, I own a farm. Farmers are a huge example of it. Farmers don't necessarily have a lot of cash on hand, right, liquidity, but they own 1,000 acres, which might be worth $20 million. They die. Planning isn't perfect. They have an estate tax issue. Where's that farmer coming up with $8 million? Well, here's how most of them do it. The government will let you finance that at about a 6.7% interest rate. So now your farm gets to pay off $8 million over the next 15 or 20 years at 6.7%. It makes more sense for those people to be able to take some of their earnings and allocate it to pay for the insurance, which will pay off the government. And I'm doing it there very tax leveraged because my insurance benefit is not taxable. Whereas if I'm putting the money aside, everything I'm earning to try to get to that $8 million is taxed before I get there. I would tell you why that the people who have money are getting better advice on insurance is because it's the more qualified people selling it to them. It's just like disability insurance. Nobody needs disability insurance till they're disabled. Our industry has a huge educational problem and a huge ability to put our conversations with our clients in the proper context to begin with. Okay. If I start a conversation with you based on, well, if you die, how's your family going to do this, this, and this? That's almost kind of questioning whether you're taking care of your family, square one, right? Mm-hmm. That's not the greatest context to start a conversation. If I started by saying, hey, how have you planned and what are you thinking about taking care of your family should something untimely happen? What are your thoughts on that? That's an open-ended conversation we can discuss. The other way, I start off by insulting you. So I think we're not necessarily very good communicators, and we don't understand, as most people don't, whether it's with employees or anybody else, the context of a conversation may be one of the most important pieces of any conversation, how you set that context.
What do we try to do to help agents educate their clients in that manner that you were just talking about?
As a group, we are better educated than a lot of people you deal with, but we fall in the same trap of what the insurance companies do. They throw out a ton of information to Jason, to me, to you, and the massiveness of that information then has a hard time getting brought down to where you can get out to your agents about how you do things, right? I think one of the things we are going to do is we're in the process of setting up a separate communications and marketing company, which is going to reach out to a lot of our agents with that exact thought process of getting to their clients with long-term educational things so that over a period of time, the client begins to feel more familiar with what he actually has from insurance. He's reading things. He's getting more information instead of us trying to make them drink from a fire hose at the time they want to buy a piece of insurance. At the end of the day, what I have found out dealing with tons of customers is Jason's buying insurance from me, there's really two things Jason is concerned about to begin with. Does he think I care about him, and can he trust me? If we can get that context taken care of, then we can actually have some meaningful discussions. Unfortunately, too many people in our world are trying to make a living for their families, and so they're driven more by getting a commission than they are by educating. I think that doesn't pay off for them well in the long run.
And our best agents really, they do a great job of educating their customers. And the other thing that they do is they focus in on a few different topics. They don't try to be a master of every single topic out there. They also hone in, and we've talked about this on this podcast a number of times, they hone in on specific solutions from specific insurance companies. If you need new tires for your vehicle, you can punch it up on the internet and take a look and see who's got the cheapest tires. So it's easy to do that for insurance as well. We have a lot of tools and resources that make that very, very easy, but cheapest isn't necessarily the best. There's a lot of features of a policy that, a lot of fine print, a lot of things that consumers need to understand how this policy works. And I think the best agents out there are the ones that are honed in on a couple different solutions and can really deliver a good experience for their customer.
Property and casualty agents, they have a better chance of actually doing the right thing for their customer because they're engaged with them for a longer period of time. When you look at a life insurance policy, if Matt pays $1,000 this year for a $2 million policy on a 10-year term, somebody's making $800, $900, $1,000 on that today, and then basically nothing going forward. Yeah. So if that person, if he hasn't bought that from somebody who has other connectivity to him, he's not really getting much servicing about that, understanding what might be the smart things to do, because they're not communicating.
I'm going to pay it for
you're
20 years. The term's going to run out, and I may never talk to that person again.
Correct. And that's another industry issue. I mean, there's a group of us who've said in the industry should be trying to levelize those commissions over a period of time, or incent people to service the business better. But that's fallen on deaf ears.
We are copied on all mail that goes to the clients as well.
Correct.
So if they receive a premium due notice or you're in grace period, we're receiving that same hard piece of mail here as well.
I have a person that I've just helped with something. They had an agent 25 years ago that did the business through us, property and casualty agent out of Memphis. He's now deceased. We, because we have all the records from that transaction and we've kept them all this time, kind of became the servicing agent. She has a mother now who the policy's on, who's 94 years old. The insurance company, not to be named on this broadcast, but
nice of you.
They put her mother's policy in lapse. What we found out is, after we dug into it, the money had to be there by September 20th of last year. She actually ACH'd the premium on the 14th, and the insurance company had it withdrawn out of her account on the 15th, but they didn't deposit it into their policy until the 30th. Wow. If somebody doesn't have followed all those records, that woman might be looking at having to get a lawsuit going to get insurance on a 94-year-old woman because the insurance company's made a clerical error. By us keeping all those records for all those years, we've been able to help people with that stuff down the road. I liken us to your Doberman Pinscher guard dog that you want to keep locked in the closet when your relatives come over. But by God, if somebody breaks in your house, that son of a gun better get out of that damn closet and bite somebody in the ass. You've seen it plenty of times. A lot of people like to keep me in a closet until they need somebody's butt kicked, and then they're more than welcome to run me out.
Yeah.
We could change Millennium Brokerage to a guard dog brokerage.
Well, you can say what you want to say about insurance, but here's something that I feel good about after 27 years of running this company. We have paid in death claims to people almost $2 billion worth of money. That's a fair amount of money to a lot of families. It's made a difference to somebody. There's people that running around with $2 billion in this world that might not have it if it hadn't been for some of the work we've done. It's not an easy, and the products have gotten to what you do every other week. How complex are these products now?
Yeah. Almost 100% of people, when they buy a permanent life insurance policy, they're buying it off of the proposal that's put in front of them. A question they really ought to be asking, in my opinion, is how has this thing really performed in real life scenarios over the last 10 years? Sometimes insurance gets a little bit of a bad name because the policies have not performed as expected. And we haven't always went with the latest, greatest, highest flyer type of product in the marketplace. I would say we've stayed more in the middle of the lane and kind of went more with your steady Eddie was what I would call it. They've actually performed very, very well for people.
It's unfortunate, but the really high-end wealthy people have a much better chance of truly understanding what insurance can do for them, because the people explaining it to them and going over it with them are much more in tune. Is the policy a good investment? Well, under the right circumstances, they are. Somebody actually bought a policy from us for $85 million of insurance that pays $5.125 million a year for it. You think they do that because they're a dumbass? They have a bunch of advisors that look into things. I tell people this all the time. When they ask me, they say, well, what do you think about managing money or insurance and all this other stuff? I say, well, the difference between what most people do and what a guy who's got a big business in this, we never get our lawyer, our investment guy, and our insurance guy all in one room once a year. Ultra wealthy people do it every 6 months. Why? Because it provides healthy tension. The lawyer feels different about things than the insurance guy. The insurance guy feels different about things than the investment guys. And so they kind of kick stuff back and forth. And when you're sitting there watching that, all of a sudden you're getting a lot of really good information, aren't you? You get to make your own decision.
Bring one of these.
For them.
Yeah.
Not for you. If I had to tell somebody about buying an insurance contract today, I would say evaluate the organization you buy it from, not the company that they're selling. We've been in business 27 years. Hopefully we'll be in business 27 years from now. Well, that gives you a lot better chance of you getting what you need to get about your insurance than somebody who's in business for 3 years and never heard from again.
As a person who owns a policy, you could have a policy that you've never talked to the agent again. They could have gotten
you don't know it.
Well, they could have gotten out of the industry. They could have passed away. You wouldn't know either one of those. The carrier could have sold the book of business and it could be managed by somebody else. A bunch of different transactions could have occurred. And as the client and owner of the policy, you have no idea because you haven't thought to talk to the agent. The agent never followed up with you. You just don't know because all these transactions have happened over on the insurance side.
But I think that's the culture of our people. That's what Jason does every day. That's what you do. That's why we've been in business 27 years, is because we're willing to do things other people aren't. If it was me buying insurance and I look back on it, I'll say to myself, I would evaluate the master general agent, which we are, that policy is being sold and bought through. Not so much whether it's Lincoln National or Metropolitan or New York Life, because guess what? They're not going to do crap for you if you got a problem. You're going to be talking to somebody who's 27 years of age, doesn't even know about the policy you bought 25 years ago, and you're going to feel frustrated and scammed. When people get helped and they feel they've been helped, they tell other people about the help they've gotten, and that's a good way to grow your business and I think feel good about what you've done. One thing we haven't talked about is, I think it's the most underinsured area in the U.S. Only about 8% of the people in this country have any kind of a disability policy. And the chances of you being disabled at some point in your life for some period of time, whether it's an illness, a pregnancy, or whatever, is huge.
It's like 60 to 70 something percent.
And it's the number one cause of mortgage defaults is a disability. But yet hardly anybody has a disability policy. But think about all the husbands and wives that both work. If one of them is disabled, your whole thing is up. And, if you got a couple people each making $75,000 or $80,000, that's $160,000. How about if you don't have anybody making $80,000 anymore? You just took a 50% pay cut. And there's only 4 things that Social Security automatically approves disability for. They're glioblastoma brain cancer, Alzheimer's, final stage kidney disease, late stage tuberculosis and respiratory diseases. Other than that, you're going through maybe a year or two while they're waiting to decide whether their Social Security is even going to pay your claim. You hurt your back in an accident, you can forget it. They're not interested in your back being hurt. So I think more people should be looking at buying disability coverage.
Somebody once told me, if you had a money machine in your basement that just printed money every single day, like what would you do to protect that machine? Like, would you hire a guard dog, hire an armed guard? Would you sit down there yourself and protect it? But the moral of the story is like, you are that machine. So like, if that stops printing, you stop printing the money, what are you going to do?
And a lot of times, not only has your income decreased,
cost of
but
living's
your
gone up.
expenses have gone up. People resist disability insurance. People don't think about being disabled. Life insurance actually can be a freeing to example Jason brought up. I've got $5 million worth of insurance. If I decide I want to take a trip someplace or do something else, as long as that insurance is staying in force, it frees me up to spend some of my own money because I know you guys are still going to get some money from the insurance. I mean, I see a lot of older people who don't have any insurance, don't have anything, and they're scrimping every dollar. Well, I want to make sure I leave my kids $100,000 or whatever. It's crazy. Yeah. So there's a lot of uses for it. But again, I still think it comes down to context of conversation.
Yeah, Tom Hegna talks a lot about live off your money, use your money, enjoy your retirement, get out there, do stuff, leave your kids life insurance for pennies on the dollar.
Or they leave it in their IRA, which is about the worst way you can do it.
That's very true.
Because it's taxed income in respect of a decedent. The more money you have, the older you get, the more popular you become.
So a lot of people say, isn't term insurance better because it's cheaper? But at what point does permanent insurance fit in or make more sense?
If I'm a young person, and I think term insurance is the smart way to go. Permanent insurance, number one, I'm going to have some specific taxes to pay in the future that I'm not going to be able to get out of. Great way to reduce the cost of that is insurance. I need to supplement my retirement because permanent insurance has cash value, and I can get money out of it without affecting how much of my Social Security is taxable. That's a permanent need, gives me flexibility. Permanent insurance helps with that. You have an age difference in a marriage that is somewhat substantial, then I think permanent insurance makes a difference. That older person needs to have that coverage in force potentially because of how much longer the younger person's going to live. When you're young, you're just insuring against an accident. It's term insurance is what ought to be bought. As you get a little bit older, you should be evaluating, I'm not saying purchase, you should be evaluating where permanent insurance fits into your financial plan. I've got a fair amount of permanent insurance for a number of different reasons, but it actually gives me a chance on my investments. Right now, we're going through all this tariffs and stocks are dropping and everybody's looking at their 401k and everything. Well, it's not affecting me much because even if my investments go down, I still have enough to live, but I still have the permanent insurance for the permanent things I want to make sure I do. I've worked now for 50 years. I would like to think that I would pass some of that on to you 4 kids. So what insurance does for me there is just covers the risk of something going wrong. That's kind of what you're supposed to do, right?
Right.
And if something doesn't go wrong, even better, but maybe I've set a good example also for you, Carrie, and my grandkids that you'll do the same for them. Term insurance is for a shorter term need. Permanent insurance is part of a financial plan, which may be right for you or may not be right for you, depending on your situation.
I like the word evaluate there. That's a good word. But one thing I think, younger people should evaluate is possibly buying a permanent insurance policy along with their term insurance policy. So, the benefits of term, obviously you can get a lot of insurance for not a lot of premium. The downside of term insurance, it runs out at some point. So if you were to buy a permanent policy alongside your term insurance policy, you can actually design that in a way to get started with a pretty affordable premium at a young age, build up some cash, allow the thing to grow over a period of time. And so when you get up there, when you're 50, when you're approaching 60 years old, you actually have a permanent policy that's pretty substantial and can be there for the rest of your life. And I think it's a very cost-effective way of doing it.
There are people, 60, 70-year-olds who are looking for more term insurance.
Right.
But let's say you buy a 30-year policy at 50 and that runs out at 80, and that's all you do between those 30 years, your chances of getting more past 80 are not great.
Oh, well, even worse than that, you've seen a whole thing. You're exactly right, Matt. You've seen a whole thing where, 25 years ago, you hardly ever saw anybody with type 2 diabetes.
Mm-hmm.
Hardly ever saw anybody. You got people stacked up with it now because we eat so bad. There's so many things we do. And guess what? If you had that 20-year term and you've let it go too far and now you've got type 2 diabetes, doesn't mean you can't get insurance. But now we're back to my car example with my lost license. it's going to really cost you.
Yeah.
So I think you got to weigh all those things, and people don't really look at, if we're all going to sit around every day and have a couple of these, in 30 years, somebody at this table is probably going to have type 2 diabetes. So you got to look at how you want to live your life. I say drink all you want to, but then you got to take care of your family if you're doing that. You know what I mean? I mean, it's an evaluation of the risks of your life. People don't like to evaluate risk until they actually have it.
When you use the probability of needing disability or needing long-term care, like you said, Matt, 67, you have a 70% probability. But people still think, what they interpret there is, well, there's a 30% chance that I won't need it.
Right.
And so therefore, people automatically put themselves in that category versus talking to people about what are the consequences if it does happen to you. Mm-hmm. It changes the thought process on how people need to think about it.
That makes me think of something. I have a customer, smart guy, has run businesses, that it gave me an explanation on his permanent insurance, which he said that buying that permanent insurance was like buying a lottery ticket that he knew would pay off at some point. The payoff point was when he was going to die. So there was no question it'd pay.
Yeah.
And basically he was just buying that lottery ticket every year that he knew would pay at some point.
Sure. You're buying a lottery ticket for somebody else is what you're doing.
Yeah. If you knew you could buy a lottery ticket that was going to pay off in the future for $4 million and pay a little bit of it every year, there's enough gamblers in this world. You might just do that.
Oh, yeah. If you were face to face with a client and they started bringing up, some of these myth-based or scam objections, what would you do to quell that?
You can change your own mind. Changing somebody else's mind is an entirely different program. The context in which you bring it to the table. If you told me, I feel like I've been scammed by this, you may have very well been scammed. I would probably tell you my story about the driver's license, how I feel scammed, but that doesn't change the fact we all need insurance for the right things. Evaluate me and evaluate my agency, and if you don't think I'm right for you, then don't buy it from me. Go buy it from somebody who you think is right for you, but don't let feeling scammed by one thing make you make multiple bad financial decisions. It'd be like if you bought a stock tomorrow and it dropped 20%, would you never invest in the market again? Denying what people feel is a bad way to fix a problem. If that person feels scammed, what he feels is accurate. We can have a discussion about it, but I'm not going to change what he feels. But I might be able to change how he feels about me and how he feels about insurance and get at the root of why he feels scammed. If you're going to deal with somebody who feels like they've been scammed, you're going to have to be willing to take the shit that the agent who scammed him won't. I think you got to recognize it. You got to say, yeah, that happens, but that's not how we operate, and tell your story. And your story's either good enough or it isn't. I don't know. It's kind of like dealing with your wife when she's mad at you. You're best to admit your shortcomings and move on. I think you got to recognize the issue, speak to the issue, and then they either feel comfortable with you or they don't, but you need to respect their feelings.